following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that music means it's time once again for the Option Block, your source for options, wit, and wisdom, laden with a heavy dose of silliness. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network, and I will be your host for this bizarre voyage through the world of options. But I am joined today on this voyage by an all-star crew, if you will, starting off with the man from the pit, a.k.a. Mr. Seabass, a.k.a. Mr. Slinky, a.k.a. the Greasy Meatball himself, none other than Mark Sebastian from OptionPit.com. Welcome to the show, Mr. Slinky.
You know, AKA was one of my nicknames in college. I don't know if you knew that. So you actually kept repeating my nickname over and over again. It kept
your friends called
popping out to me. They said, yes, that's right. I was named after the healthcare bill was actually named after me. So the Affordable Care Act.
Your friends were very prescient nicknames.
Yeah, they call me Affordable Healthcare for the ladies because I would make their hearts feel warm and toasty and good inside.
We'll let our listeners judge for themselves, I think, perhaps on that one. Maybe you should have cut it off a wee bit earlier, but we'll let the listeners judge for themselves. And we're also joined on the old all-star panel today by the man from the mountains, a.k.a. St. Charles, Illinois, good old Uncle Mike Tusaw from Know Your Options, Inc. Uncle Mike, welcome back to the show, sir.
Always great to be here, taking a break from the hunting the mountain lions out here, and going to wrestle some alligators today with this market.
I did see a warning on the news the other day to look out for more coyotes in the Chicago area. So are you dealing with more coyotes than normal, sir?
I'll tell you what, I actually have seen a couple of coyotes lately.
These coyotes get everywhere. I remember, it must have been it was a while ago now, but there was one of them ran down by the exchanges downtown by the Board of Trade, and actually I believe it was in the Lonti Cafe or something right next to the Seabot, and they actually ran into the door and climbed into the freezer. And they were sitting in the walk-in cooler where you walked in to buy orange juice and yogurts and things like that. They had a coyote. I remember it was right there off LaSalle Street, so they can get anywhere pretty much.
Well, it's funny, like when we were driving down the road a couple of weeks ago, and so a coyote was on the side of the road, so my wife's trying to explain to the kids what a coyote is, what species it is, and being educational. I'm like, so naturally I just chime in and say, that's the one that chases the Roadrunner.
So yeah, that is the one that chases the Roadrunner.
Do kids today even have a concept of the Roadrunner? I think if I told my little guy about the Roadrunner, he'd look at me like I was crazy. He had no idea what I'm talking about.
We just introduced him to my kids, so we want to expose our kids to quality cartoons. So
we want to get those kids started on the physical violence cartoons very early, jumping off cliffs, falling.
Oh, I'll tell you what, Wile E. Coyote's a great American. He does not give up. He gets tossed off cliffs. He gets anvils tossed on his head. He does not give up. Wile E. Coyote is a great American in my book.
But yes, while we're also joined here on the Coyote Block and also the cartoon block by none other than Mr. Big Tim Navabi, holding down the OX hot seat today. Mr. T-Knob, welcome back to the show, sir.
Hi, Mark. How are you?
I'm good. Are you enjoying our coyote discussion?
I am. Mark Sebastian said that was a coyote. I thought I saw a cougar in his yard, but I guess I was mistaken.
No, I was out. Never mind.
Don't even.
Yeah, I already know where.
Like that. Didn't do it. I was about to just So.
No reason. Tim set you up. There's no reason to take the bait. All right.
I know.
With the coyote block concluded, we're going to dive right into the trading.
The trading block.
All right, and that sound of trading and bells means it's time for the old trading block, the portion of the show where we break down what is trading, what is moving the old markets today. And it was a lot of upside in the old markets, a lot of green today, unless you're looking in one certain direction, aka volatility. The S&P was up about 15 handles today, or a little over 1% to 1358. The Dow up about 123, or exactly 1% to 12904. The Nasdaq up a walloping 44 handles, or 1.5%, leading the charge today, as tech is wont to do of late. Up 29, or closing at 29.59, almost 29.60, and the good old VIX cash closing at 19.26, down 1.88 points, or nearly 9% on the day. And maybe we'll start there, as we often do here on the old trading block. And before the show, Mr. Seabass, we were discussing some interesting activity going on in the old VIX futures. Why don't you enlighten our listeners about that a little bit?
Yeah, my friend Jared Woodard pointed this out a couple of days ago.
Jared Woodard of Aaron Condor fame.
Yep, he's been on the show before. He's one of my co-writers with Expiring Monthly. He was pointing out that there was a major disconnect in volume, really low volume in S&P 500 futures in the stock exchange. The only place where they're actually seeing record volume right now is over on the CFE, where they trade the VIX futures, which have been, over the last week, or week and a half, really been doing about double the normal volume. So, his point was, follow where the paper is flowing, and if there's heavy volume in the VIX futures and light volume in, all the cash markets, well, maybe that's telling us something. Kind of an interesting thought process. Open interest on the VIX futures is 200,000 contracts, which is about the ability to hedge, what is that, 100 million Vega, something along those lines. It's at a $50,000 multiplier. So is that $1 billion in Vega? Yeah, that's $1 billion in Vega.
So is he thinking this alludes to the fact that it's more the professionals are out to play right now, and the retail and some of the smaller size guys are kind of sitting on the fence? Because typically,
Mark, that's $10 billion in Vega that's currently open, that is currently being held probably by the general public. Kind of an interesting thought. Yeah. That's a lot of Vega.
But as our friend Tom Sosnoff has pointed out on the show in the past, VIX futures are irrelevant for retail. So
Tom and I can have words on that.
Let's go on that road again.
Let's not go down. Every time I go on Tasty Trade, he and I just go at it. It's hilarious.
But that would seem to point out some interesting disparity of activity there, where the volume is light, where perhaps some of the traditional players in the VIX options and the VIX cash would be, and driving the VIX cash would be, of course, retail. That's been a huge retail. Mm-hmm. That would seem to say that maybe they're perhaps on the sidelines right now, not exactly looking to scrape for the last few points of downside in the VIX, but waiting for the next shoe to fall.
I think the retail public is very out of it right now. Combine a horrible 3 months with MF Global going bust, and it's going to scare away a lot of the retail public. In fact, my understanding, in the option side, the only place where the retail public is actually growing at all is on the futures option side in some of the ags, where the stuff's getting busier.
Yeah, we certainly do a lot with the CME folks, and we just had our recent show with them where we discussed quite a bit of their weekly volume. And weeklies definitely is where the growth is for them, and particularly, you're right, in the ags and some of the other products like...
Yeah, and we talked a little bit. Their weekly thought process was much more thoughtful than the equity side. Yet again, proof that the derivative guys are better than the equity guys.
They tend actually.
It's just true. Stock traders are the low-hanging fruit of the financial world.
They tend to at least buy premium in the weeklies every now and then, which that depending on your viewpoint could be good or bad. But they use them perhaps more the way they were intended to be, which is short-term hedging as opposed to rampant premium selling as soon as they're listed, hit the bid and hold and wait for zero. Tim, you have an interesting viewpoint on this, I'm sure, because you interact with the retail flow on a regular basis. Would you agree that they're pretty much on the fence right now, particularly when it comes to VIX and volatility? They're kind of waiting to see when the next shoe is going to drop before they dive back in?
Well, I mentioned last show, that some people were, trying to figure out ways to go long volatility. And, because, I get these phone calls are very easy to remember because they're saying, hey, I can't put in this, option on the VX, on the VIX option, what's going on. And, when you kind of point out, well, really, that's based on VIX futures. You can't really trade the VIX. And, what you might want to be looking for is the VXX and all that. That's kind of where the activity was, I would say, late last week, earlier this week. Today and yesterday, they're all a little mixed up, to be quite honest with you. If you weren't sort of getting ready for yesterday or sitting on the sidelines or just not doing anything, but you were trading, yesterday or trying to get out yesterday and then you have today, a little mixed up. But, that's kind of what I've seen. So, I haven't had too many people call today and say, I want to buy some volatility or some VXX.
Yeah, Tim, an interesting thing is that this is the highest implied volatility in the options that I've seen without the VIX exploding in memory. VIX option vol hit 110% yesterday on the close, and the VIX was below 21%. We've got this weird thing. Big uptick in VIX futures, big uptick in volume in the ETNs, and then got option volume going through the roof. Meanwhile, SPX volume in the toilet, S&P volume in the toilet. It's a really – we're going to run into some weird fully hedged market where we bounce off of this stuff again. But that weird break in correlation, I was telling I wrote this out on my blog. I was calling it a Michael Myers market because it feels like the market is a 14-year-old teenager, a 16-year-old teenager. Maybe she's really 20 so she can show her boobs in the movie. That's walking down the hallway and you can hear like the pensive music, you hear.
Yep.
But Michael Myers hasn't popped out yet, and the market's kind of giving me that vibe right now. The market is like a scared, topless 16-year-old where Michael Myers is about to pop up. That's maybe the
Jamie, what's her face?
Yeah, Jamie Lee Curtis. Probably not who I was thinking about.
This is your infamous babysitter in the horror film Indicator that you've referred to. Yes.
Yeah, exactly. The BHI, as I like to call it.
And of course, the market rallying today was the result of several factors. We saw continued progress in the Greek deal, as well as stronger than expected economic data. We saw jobless claims dropping to a near 4-year low last week, which is providing a lot of little momentum here to the market, as well as good old January housing starts beating expectations. So if the job situation is improving and the housing market is improving, then perhaps the worst is indeed behind us, and VIX is headed for sub 12. There we go. The worst is behind us. Of course.
Well, something's got to give. Realized volatility is below 10%. This is near 20, so something has to give. Every time I'm like, something has to move, Don writes the email being like, option traders don't know anything. And I was like, oh, Don.
Don Schlesinger of Volatility Views fame, and he is quite the fan of the dirty emails. He slips in some.
Well, not dirty, but more just saying.
Every now and then. Don likes to work blue.
Yeah, he does. He's super not blue on the podcast, super blue via email. Let's just put it that way.
Talk to him in real life, and you need to plug your ears sometimes. Just amazing.
Exactly.
The string of epithets that will.
He made my 2-year-old cry with his dirty language.
All right. And before we besmirch Don any further, Mr. Tusa, what were you watching today? I'd imagine since you're so heavy into Ford these days that you were keeping an eye on GM. Are you now going to switch your allegiance to GM? Is it time to move on? I know you were kind of hemming and hawing about Ford when last we talked.
No, I mean, I'm not really heavy. We don't have a very huge position in Ford, but I'm still liking Ford. I think that the bottom line, it's a good company. I know if I recall correctly from the news today, didn't they say GM had like their best revenue year in history or something along those lines?
Something along those lines. Definitely since the bailout, obviously. That's the first time they posted a profit in quite a while. So
yeah. So I mean, beside the fact that I'm having a heart attack from hearing such news, it's just out of from being in shock. I mean, I still think that Ford's a better company. They didn't take the TARP money, and it's like when you're baptized in fire, you don't melt in the sun. And GM got a bailout, and Ford did not. They're tougher people at Ford, and I'm still a Ford fan.
So you're not swapping the old collars to GM and out of Ford then, or anything along those lines?
No way. Definitely Ford over GM in my book.
Ford is getting some love, of course, in the post-GM halo effect there. They're up about 10% today as well, as expected. So,
I mean, everything's going right for Ford. The Detroit Lions, Ford cars. Apparently that new Focus that they're coming out with in 13 is sweet looking. That's what I heard.
It's be really interesting. The hybrid stuff, the electric stuff. They're doing a lot of interesting stuff on the technology side to kind of make their cars.
Well, Ford's done really well on the styling side of it, and that's where the Americans were missed so long. It's like, here is a really ugly car, which is funny. Americans couldn't make cars that Americans like. You know,
that is ironic.
Yeah, now Ford's starting to do it, which is a good thing.
It takes a German to tell you what you like, damn it, and then you listen and you say, thank you, sir, and then you buy it. So that's going to do it for the old trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And it's time for the odd block, and I always let that theme run a little long because I like that little flourish at the end. It's got a little jazzy Bond-esque type of flourish. That thing is, it's a good way to start off the old segment. Gets me pumped. And we're gonna
miss the old Sebastian imitation of the odd block.
Well, listeners can go and download 100+ episodes that have that on it if they wish to relive the golden glory days of the old odd block intro. All right, and we're going to kick things off on the old odd block today with some whipsaw action here in Morgan Stanley, ticker symbol MS. They closed today at 1919, an auspicious level for them. This is the name that's doing about 50,000 contracts a day of late. Going into earnings, they did 112,000 today, so a sizable day for good old MS. They've had a bit of a roller coaster ride over the past few days. Post earnings, they've rallied north as high as nearly 21, and then they've been turning right back down. On the other side, a lot of that downside has been driven by the fact that Moody cut its rating there on Morgan Stanley by 3 notches, which is a pretty sizable move. I know we demean analysts on this show every chance we get, but you don't see them changing their rating by 3 grades very often. So that sent the stock down. It got down into the 18 level at one point today, about over 4% at one point today. And so a lot of people saw that trend and started piling in very early. We saw people gobbling up March 17 puts like they were going out of style today. We had by mid-session, when the heat of the downturn really was starting to be felt, we already people picked up already about 15,000 of these puts, and we ended up seeing about nearly 30,000 going up on the day. The bulk of these, particularly early in the session, were going up for around 60 cents as people were scrambling, thinking that Morgan Stanley was heading far to the south. And so they were paying up like crazy for these puts. And what we've always said is when the stampede is happening, maybe you want to get out of the way a little bit. So we saw people piling into these Morgan Stanley puts, paying up on the premium side over 60 cents and higher in some cases. Of course, the stock turned around shortly after the economic data came out and the good news out of Greece, and the stock started turning to the north, closing today actually up a wee bit, about 1% on the day. So all these people who were scrambling to gobble up these puts, 30,000 or so of these puts going up today on the day, were whipsawed pretty heavily. These things closed down about, over 30% in value since the height of the frenzy early this morning. We also saw some savvier players turning to the upside here, picking up about 6,000 May 20 calls, so farther out on the old chain. They picked up about 6,000 of those for well over $1. Those turned out to be the savvier trade of the two because these things are closed up about 23% on the day, trading around $1.40 towards the end of the day. So people were the folks, not surprisingly, the folks who panicked and stampeded to get in on the downside ended up getting run over, and those who cooler heads who prevailed and loaded up on some upside ended up faring much better on the day. Tucson.
This is one of the only times that I really like trying to catch the falling knife. Now, I have no positions in Morgan Stanley, but this is one where if I'm ever just got called out of a stock and it's the new week for expiration or things like that, if I see something like this, and let's say Morgan Stanley was a stock I wanted to own, I love selling puts into things like this at a lower level because of the fact that you can get just that little bit extra premium that goes a long way if you do it enough times. That's one of my favorite trades that there is.
Yes, taking advantage of the flurrying hordes is always a great strategy. You typically don't want to be on the buying end. You don't want to be the last guy there stampeding in to buy these puts. You want to be exactly like that. You want to be the calmer head and taking advantage of them bidding that premium out of control to put on some short positions and instead leg into or trade vol and hedge it and leg into a much smarter position of the two.
Well, it is, and this is one where you had like I'm in a different world than a lot of the people that are scared to death or trying to take it or trying to follow the stampede. I would be in a situation where I'd be fine owning Morgan Stanley for a longer period of time, so let it get put to me. So that's just one of the cases where you can take advantage of opportunities like this if you keep your eyes open.
Mike Tusaw's motto for life: put it to me, baby.
All
right. And then we're going to move on to a review of some activity from yesterday, actually, in the cereal realm. Don't hit on the cereal aisle too often in the old odd block. We're going to talk about Kellogg, ticker symbol K, closed today down about 31 cents, but the activity we were looking at was actually yesterday when they gapped up nearly $3 to trading almost 53. We saw quite a bit of activity in K, particularly leaning towards the call side of the fence. You saw about 19,000 calls going up versus 4,500 puts, so a substantial call to put ratio in this sense. This is a stock that usually does about 2,000 contracts a day, so doing well into the 20,000 contracts is a sizable day for Kellogg. And what we saw was the bulk of the activity, people flocking into these very near-term calls, the Feb 52 halves, gobbling these things up. About 8,000 went up of these yesterday, or nearly 9,000 went up on the day. These were the bulk of these buys, a lot of them going up in the 30 odd cent range. Hopefully, we saw a little bit of activity today. Some people might have closed these out as the stock dropped a little bit. But people piling in for some very near-term upside here in Feb. Actually, this is at the money stuff now. And then, of course, we also saw some other people, as our writer so cleverly says, snacking on the Kellogg March 52 half, March 55 and June 55 calls, gobbling all those up as well. Those probably the savvier of the plays, as these Feb 52 halves are not, these are a coin flip at this point where they're going to go. So hopefully these people are legging into something else who were gobbling up on all this Feb upside, or where they're thinking that Kellogg had a little bit more room to run to the upside. There's still over 6,000 open on this strike today, so a lot of people still holding on to these calls. Hopefully they're going to get a chance to get rid of some of these things before tomorrow afternoon. These are literally the definition of lottery tickets at this point. And we saw this stock rallying and moving quite a bit after they hammered out a deal to buy Pringles from Procter & Gamble. So that's what sent this stock off to the races. All that potato chip money flocking into Kellogg is set them off to the races. Mr. Sebastian, I know you've had a potato chip or two in your day. Do you think this is a great deal here for Kellogg? Are you loading up on these Fat 52 halves? Is that you on that strike?
Not as much. I've just been loading up on Crave cereal and all my other favorite Kellogg's, delicious Kellogg's treats.
I wish they were buying J's. I could say for the option, you can't buy just one.
Oh.
Too bad, though. It doesn't fit here, though.
Did they have earnings coming up, Mark? Is that what's going on?
No, they acquired the Pringles brand from Procter & Gamble, and that's kind of
right.
what
That's
set
a
them
great
off to
thing.
the races.
That's a great thing.
It's funny you mentioned. I always thought of you as more of a Count Chocula Blueberry kind of guy. I see you eating those cereals in the morning.
I figured him as a Captain Crunch kind of guy, actually.
And I could probably see that too, but I think he's more of a very heavily sweet tooth kind of guy. Given the energy level that he brings to the show on a regular basis, I could see him having some serious sugar highs throughout the day. And they had earnings on the 2nd, so earnings were a couple of weeks ago here in Kellogg. So this is all post-earnings love flocking in to Kellogg. All right, that is going to do it then for the old odd block. And now we're going to dive right into the listener mail block.
Listener mail. Listeners write in.
Mail's in.
Mailbox.
All right, and welcome to the old mail bag. And I've been promising for quite a while to get more of your listener questions, your listener feedback onto the show. So we're going to endeavor to do that more often. And before I even start in, I have to apologize to today's writer. His name is Dwayne Bean, coming out of Oregon here, and he's been trying to track me down for quite a while, and I'm somewhat of a hard guy to get in touch with these days, so I apologize. He's been trying to reach me at various venues for a long time, but I finally got his email, and it's a very interesting one, and I was going to respond to it myself, and I thought, why not open it up to the full floor here on the old option block? A, because Dwayne's a big fan of the show, and B, because it will have some interesting perspectives. I know Uncle Mike has an interesting perspective on this one since he shares some of this sentiment with Dwayne here. So this is a long letter. I will jump to the question part. But essentially, we have a listener writing in with a college-age son who has $10,000 to invest, and both he and his son are very taken with options. There's also some interesting stuff on the employment side where he's had some employment issues. But he asked a couple of questions. First off, he asks, if my son and I really study hard, manage risk carefully, and learn from mistakes, are we fools to think that we can over time actually make some money instead of going bust? I'm not talking millions, maybe 5 to 10% better than the indexes. And then question 2, he asks, can we be profitable long term if we limit our trading to debit and credit spreads rather than engaging in more elaborate, complex strategies that you, Seabass and company, discuss on the show, such as flies, condors, ratios, etc. Please know how much I love the show. Because I have a lot more time than money, I listen to every episode of the Options Block and Volatility Views. You're doing some awesome work there. Thank you. And thanks in advance for taking the time to read and respond to my email. Well, thank you for your kind words, Dwayne, and we're sorry you have so much time to listen to all of our programming. That's a.
We'll go last. I want to hear everybody else's.
You want to go last? Well, I know I was going to start off, but I think Uncle Mike is chomping at the bit because you share some of the concerns of the listener, and you also have you kind of got lured to the dark side of options from substitute teaching, correct, Uncle Mike?
That is correct. My story, I know I've talked about it a little bit on the show before. I got the blessing of playing in the NFL very briefly, and my joke I always tell is, for me, NFL stands for not for long. But while I was getting cut from various teams or various leagues, one job that I did to pay my bills was substitute teach. At the time, I weighed 325 pounds, and basically, if anyone's ever subbed before, the way it goes is that you have to be a jerk to the kids or you're going to get walked on. So I really didn't have much of a problem being a jerk to the kids. I basically would stand in front of the class and say, sit down, be quiet, do your work, and then I would have an hour of silence. So during that time frame, I read every option trading book known to man, and I started trading options, and I learned this ingenious strategy called the bull put spread. And I'm pulling in $3,000 to $4,000 a month doing these credit spreads. And this is in like a $30,000 account that I had. So naturally, at that point in time, the whole world was stupid except for me. I was convinced of that. And so as football was not going to be my thing, I learned that, you know what, forget this getting a job stuff. I'm just going to trade options for a living. So with that being said, I decided, well, you know what, with these credit spreads, I can get a better fill on the credit spread if I just go naked the short put for a day or two, and then some time decay will eat away, and I'll get a better fill on the short side of it. Yeah, I have to margin myself, and yeah, I have all those numbers in parentheses in my account, and it's a little bit scary for a day or two, but who cares? I'll get filled on this other put. What's the worst that can happen? You guys have all seen this movie before, and you guys know how this story is going to end, but with it, I learned what a pharmaceutical downgrade was the hard way one day, and it was a $6,000 loss in a day. And so I was going months while being profitable, and then this one day I just kind of realized that you need to have something in place called risk management in some way. Now, the strategies that I had weren't bad by any means, but the fact that I was just throwing the dice and not assuming that I could ever possibly be wrong with these credit spreads, that's where it was incorrect. So in my time frame, I ended up getting a job at MetLife, and that really wasn't a good fit for me. But when I was there, I was talking with like a lot of other advisors about, well, instead of doing this annuity or instead of doing this mutual fund, why not just have the client use SPY, or why not do like a covered call, or just various option strategies? And the response that I would always get is that no one's ever going to ask you about this. Just sell this annuity or just sell this mutual fund. And that really didn't sit too well with me, because I know that it wasn't something, and I'm not saying that all annuities are bad or all mutual funds are bad. It's just that it's one where I think that if you go the extra mile for a client, then it makes it worth it. So as time went by, I did well at MetLife doing insurance. I really didn't do too much on the investment side of it, because I didn't really sync with a lot of the products that they had. Some, yes, but with it, I ended up getting a job at Options Express, which was a much better feel for me. And this whole time, I was developing my strategies, which I've worked with my own money for, over 10 years now. And so with that, it took me many years to get to the levels with which I'm at today. But my thing that I would like to share with Dwayne would be that stuff like this doesn't happen overnight. And I don't know of any trader, and I did the math on it. I think I've spoken with close to 10,000 people in my career in one way, shape, or form. But of all the people that I've met, I don't know of any consistent trader or anyone that's actually been able to trade throughout time by just saying, oh, wow, I did this and then I was okay. Every successful trader that I've ever met has some type of war story about how they lost money in one way, shape, or form, whether you're more of a long-term guy like me, or whether you're looking to do stuff with the VIX all the time like Seabass's, or whatever the case, or if you're looking to short everything on earth like John is from OX. Whatever the case may be, everyone's going to have some type of war story, and you have to pay your dues in some way, shape, or form. And I'm not saying you have to lose money, but what I am saying is that learning this is a process. Get yourself educated. Don't go all in right away, and education is the key.
Definitely, and hopefully we've helped him a little bit along those lines on this show. And I think, Mr. Navabi, I think you have an interesting suggestion, one that I would echo myself. So I'm sure you get a question like this on a regular basis. So what is your advice here for Dwayne and his son?
Sure. I enjoyed listening to Mike's story. It was real nice. I agree with a lot of what he has to say. I'll kind of keep mine brief here. One thing that I really liked what Dwayne said is manage my risk. I mean, that is very, very key, very important, because I think, like Mike said, every trader is going to tell you about some sort of blow up that they had, but what's most important is how do you come back from that, and that's really how do you manage risk. So managing risk, I think, is number one. Number two, I like virtual trading. I like to have a virtual trading account or, with what I want to use. And for example, in this case, it would be $10,000. We have virtual trading here at Options Express. You don't have to fund the account. You can have a zero balance and, have all the tools and charts and quotes and everything that's available, including the trade desk to ask questions here at Options Express. And you can do virtual trading. So, I would also, do some virtual trading, which is going to be practice. So manage risk, practice, and, keep it simple. I think, like you said, do some credit spreads, don't get into anything too complex, too difficult. But I don't think he's a fool to think that, he can be successful or do a little bit better than the index. I don't think that it's going to be easy, and I don't think that it's going to happen overnight. But great question, and it's nice to hear. And, I do speak to customers who, started years ago in similar situations with $10,000. And, they educated themselves, they managed risk, they did some virtual trading, they never let anything, just totally blow up on them. And believe it or not, they really are not worried about going to work every day. This is what they do full time. So I think it is a possibility.
And I want to add something to it. Oh, sorry about that. Didn't mean to chime in early, but sorry about that. But you had mentioned practicing is important. I want to add something to that too. Does practice make perfect? No, practice does not make perfect. Anyone who thinks that is incorrect. Practice makes permanent. Perfect practice makes perfect. Now I'm going to get into some athletic cliches here, so my apologies for that. But nonetheless, this needs to be said. If you practice in your virtual account like someone that says, I'll just throw $1 million in there. Let's have some fun with it. Let's buy some IBM today. Oh, wait a minute. I lost $100,000. Oh, well, I'll make it back tomorrow. Let's buy some Apple. Or if you're doing that and you're not taking it seriously, you are wasting your time. You're practicing and you're making permanent. Once you play with real money, then those bad habits with which you created virtual trading will carry over. Now, let's say whatever system you decide to go with, whether you're going to be a spreader, whether you're going to try to pick stocks, whether you're going to try and do trade the VIX, whatever the case may be, trade it in your virtual account as if it were your real money. If your system requires you to read 2 newspapers a day, then by gosh, when it's virtual money, you need to read 2 newspapers a day. I've seen too many people through the years trade and practice accounts and not take it seriously. Trade it like it is your real money as good as you possibly can. Now, don't get me wrong. If you have real money on the line, you will pay attention to it more. But if you're going to try and go the virtual trade route, which I agree with, I think it's an excellent route to go before using any real money, take it seriously. If you need to look at 30 charts a day, then you look at 30 charts a day. I don't care if you have to go out for a social outing, you say, I got to go trade. And if they look at you funny, then, well, that's too bad.
Yeah, I think Tim hit the nail on the head. I think that is an excellent way to cut your trading teeth, as it were, these days, and get a feel for how these things perform. Because, back in our day, back in your day, Uncle Mike too saw you had to learn by doing, and it was often a painful and expensive lesson. Everyone gets sucked down that credit spread wormhole, and they think it's so enticing, and the next thing you know, they have a similar experience to what you experience, and then they wake up and see the truth behind what's going on there. So I think Tim's suggestion is an excellent one, to open up a virtual trading account. You can do them at a number of firms. OX, of course, offers that, and that way you can come in and just at least test some of your strategies. I like what you write here. I like the thought process you're engaging in here. You're not coming up to us saying you want to load up on OTM options or anything like that. So obviously you've listened to a few of our shows, and some of these strategies that we espouse. I like that you're talking about spreading. That's a great way to start off with. You mentioned credit spreads. That that can be a very dark road to start off with. If you do it well and manage your risk and understand exactly what's going on, it's a better way to go, especially not than just naked outright selling puts. I like the fact that you're talking about debit spreads. I mean, that means that you're thinking the right way. You can limit your premium exposure rather than just loading up on ATM or some other options and just paying for pure longs. You're getting the spread methodology going. And of course, with only $10,000, the leverage aspect of options kicks in, where you could actually put on a variety of interesting positions across a variety of underlyings rather than trying to, let's say, take $10,000 and trade it aggressively with the underlying. It's just far too much, not enough capital to really trade it efficiently. So with options, you could certainly do that. I think take Tim's suggestion. Go off, open up that virtual account, and start playing with some of these strategies that you will be implementing when the real rubber hits the road. And also, Uncle Mike is not incorrect that you do, if you really want to make this successful and beat the indexes, something that many pros around the globe struggle to do every year, then it is a commitment. It's a time commitment. Eventually, if you want to graduate to the level where you're trading volatility and you're scalping gamma, that's a full-time trading position at that point. You're trading full time. You can't afford to be away from your screen. So as you progress, realize that the commitment on your part will increase, not decrease. And hopefully the results will be worthwhile and will offset that. But definitely, and I'm glad to hear you're starting off on the right path. And I think you certainly have the right outlook. And it is possible with some effort. Mr. Seabass, what say you, sir?
Well, I think the one thing that troubled me about this email was that the guy thinks that he can skip parts of the learning process. Yes, you can just trade call spreads and put spreads. By the way, nobody that understands options uses the term credit spread consistently. They just don't. There's no such thing.
You love that old saw of the credit spread. That's why I had to say it.
It just drives me nuts. I mean, it just shows such a...
But Mark, you get money put into your account with a credit spread. Debit spreads, you have to put money out. Why wouldn't you?
Oh, yeah.
I baited him, by the way, by everybody.
I know. Well, the one thing I would say is there is no shortcuts. You don't have to trade some of the spreads that I might trade or different things like that. But you have to learn all of the major portions. You have to understand option synthetics. You have to understand why there's no such thing as a credit spread. You have to understand how options function. The crazy thing is, ask Mike Tusaw, self-taught. He'll tell you that the way he really learned was first he really learned how options work. Then the strategy itself was pretty simple. And that's the way almost everybody learns. Mark Longo, I'm sure, learned that way as a market maker. What do they do first? First, you're going to really understand options. What do you do second? Then you learn how to trade them.
Yeah. Position management came first, certainly. Risk management. They beat that into your head first. They want to make sure you're not going to blow them out when they put you on a badge. Then everything else comes second.
Yeah. Risk management and understanding of how options function. So, sadly, there is no simple answer. You have to learn the hard stuff. Now, you don't have to trade the hard stuff, but you have to learn the hard stuff.
Well, I'm taking Dwayne at his word, though. He says if he and his son study hard. So I assume that means they're going to crack a book here or there. They're going to read some websites like ours, and they're going to learn about things like synthetics, and they're going to learn about things like volatility skew and all the things that actually impact their options position. So I'm assuming he's not just writing that for the sake of it, but he's actually going to do it. So if he does do that, and he does establish a very strong understanding of options and their fundamentals and their basic concepts, and then he goes on to engage in beginning spreads like debit and quote-unquote credit spreads, then I think he can be successful. And then he eventually will, of course, want to go to that next level. He will want to start saying, hey, I like these iron flies. This is better than just a standard straight-up debit/credit spread. Maybe I want to start looking at some of these time spreads because this allows me to get some gamma in here. He's going to start talking about gamma. He's going to want to start learning how to hedge gamma. That all comes with time.
Yeah, and speaking of which, Mark, I think you and I are going to be sending out an email sometime either next week or the following week where Andrew, our Monday guy or Thursday guy, whichever, wrote up a book on why there's no such thing as a credit spread. And I think every one of our listeners would find that one interesting.
We'll definitely have to send one to Dwayne and his son so they could review it for themselves.
And Dwayne Jr.
So Dwayne, just to recap, and for all our listeners to recap, we think you're on the right track. We take you at your word that you are going to study hard. Mark will be watching you to make sure. He will test you on synthetics every now and then.
When you feel like you're ready to start trading, call me up and I'll make sure. All right.
We'll give you a quick Options 101 rundown, and then open up your virtual trading account, start kicking the tires, and then start. Like I said, Uncle Mike said, it doesn't really count until you're actually trading it. So when the rubber hits the road, you feel you're ready to do that, then you take the plunge and start putting some real money on the line, and you'll be amazed at how interesting an experience it could be. Life altering for all of us here, that's for sure. It made us all do options radio. What's more life-altering than that? All right. Thank you for your letter, Dwayne. I hope you and your son fare well there. And for all of you other listeners out there who want to reach us, of course, you know the way. I hope you have an easier route than Dwayne did to track us down. You can reach us via the Options Insider Forum, via our Twitter. Our handle is twitter.com/options. You can also get us on Facebook or call our voicemail, the number for which I don't have offhand, but I will put it in the show notes. So you can call us. There's a number of ways you can get in touch with us, but leave us questions, comments, criticisms, whatever you like, and we will share them on the air. So that is going to do it for the old mailbag this week, and now we're going to dive right into the strategy block.
The strategy block.
I love that. I can just see Uncle Mike scratching his chin and sitting back in his chair with a brandy snifter and a smoking jacket and pondering deep, deep options thoughts. So, Uncle Mike, what deep thoughts are you going to share with us this week?
How do you know when you're being stupid? That's one thing that I had some thoughts on this today, and I oftentimes wrestle myself with when to roll an option or why I would roll the option. Don't get me wrong. I have a list 9 miles long about what my rules are and that type of thing. But for Apple, as I'm sure everyone can guess, for the BBI, I haven't gone to the bathroom in 3 weeks with that stock. This thing's just been taking up a lot of my time
all
lately.
That call rolling, baby.
Yeah.
It's hard work.
No complaints. So
it's a first world problem to have. Let's just say that.
Absolutely. Absolutely. So with that, I want to just kind of go over, when do you know if you're getting caught up in something? Let's say that you're an Apple bull. I'm an Apple bull. But with that being said, I also try to remain sensible on the reality that I could easily be wrong. Now, I'm not trying to say that you have to do collars or do what I do with my clients all the time, but have some semblance of the fact that you could be wrong on it. There's a lot of people, and I'm willing to bet that Tim can probably even say this, he's probably getting a feel from a lot of people that Apple is just the next thing. Apple's going to be at 900 within the next couple months. Let's just buy a lot of Apple. Apple has the feel of a lot of the tech stocks did back in around 2000. So with that, does that mean Apple's going to crash? No, I'm still bullish on it. But what do you do if it goes against you? I have a plan for that. What am I going to do if I'm wrong and Apple goes down? I have a detailed plan that I talk to all my clients about whenever the subject comes up. But let's say that you're looking at Apple and you're thinking, well, I'm not going to buy a put on Apple right now, or I'm not going to buy a put on Apple. This thing's going up. Why would I bother with that? And when you start thinking that stuff, that's when you're being stupid. Now, here's the next level of where stupidity comes into play. Well, Apple could go down, and instead of agreeing with yourself, if you're saying to yourself, well, it's Apple. I mean, after all, this is going to happen. This is going to happen. Come on, it's Apple. They have this new iPad. They're going to do this. They're going to do that. Steve Jobs is ruling the world from the grave. Steve Jobs is talking with God up in heaven, and that's why Apple's doing so well. If you start arguing with yourself and saying things like that, well, it's Apple, you're in for a world of hurt. I can tell you plenty of stories of bad stocks from the past. Enron was looking great. Pan Am. There's a lot of stocks out there that you really don't hear too much of today. And with that being said, you need to recognize the fact that Apple is just another stock. And I don't care if it's Apple, if it's whatever stock you're looking at, it's just another stock. Apple is not immune to risk management. Don't think that just because it's Apple, you can make it so that you don't have to manage risk or have a plan for the downside. So the message for the day is, if your advisor tells you, well, you should have some type of risk management to the downside, and your comeback is, well, it's Apple. Well, yeah, but it could go down. No, it won't. Apple won't go down. Well, it could. That's when you're being stupid, and that is one to grow on.
So that was Uncle Mike's lecture for the week on Do Not Be Stupid. Shaming some of our listeners into looking into downside protection and or risk management. Well, I think you insulted a lot of Apple listeners, sir, but they're probably the better for it. They might need a little bit of a wake-up call.
Well, seeing as I'm the biggest Apple bull on the show, it had to happen. It had to come from somebody, right?
Better you than myself or Sebastian, who are known to be in the Apple critic camp. That's going to do it for the old strategy block. And now we're going to roll right into Around the Block.
Around the Block.
All right, those car horns mean it's time once again to peer into the murky ether of the future and divine what the options market holds in store for us. And we talked earlier about GM. It was quite a good day for GM. They had earnings this morning before the open, and they rallied hard today, up about 9% on the day. Whether that affects your outlook for the entire automobile sector or whether you just think it's a flash in the pan for one particular company. An interesting one. We've talked in the past about how we've all kind of become a little bit lukewarm on Ford for the time being. We had overwritten it substantially going into earnings and going into February, and now those positions have been closed out, and now we're kind of looking for how to position going forward, and we're still kind of wrestling with this, whether to keep it open, whether to adopt that overriding strategy again, or perhaps just do a straight-up Uncle Mike collar/covered call. I know I don't want to be charged a licensing fee if I do that, though. I know
I'll cut you a deal.
You boys at KYO tend to run the rule the collar roost over there. Of course, we also have earnings coming up next week, and this is a big one. So all of our listeners should sit down and pull over to the side of the road if they're driving. And you and Uncle Mike, Tim and Uncle Mike, you should really sit down, because on the 23rd, we have earnings coming out from Radian, good old RDN. And you may remember this name. This one actually was an odd block staple. It's one of the ones we actually started the year with last year in the odd block, with people racing and scrambling to buy upside in this one on the 9 and 10 strike calls. I believe they were the January calls, because it was just going off to the races. I think it was so enticing, in fact, that Mr. Sebastian and I couldn't help but sell a few spreads to them, because it was just so attractive at those levels for those people. And of course, the stock never looked back. I don't think it ever even reached that 10 level. It's right now trading at $3.61. And it has been as low over the past year. It got down well south of $2 at one point. So this name has had quite a rough year, a rough 2011, and it'll be interesting to see what 2012 holds in store for it. It's already rallied quite a bit, though, going into 2012. So interesting outlooks, I know, for all of our odd block devotees out there. There might be an interesting one to watch. A more serious one coming out before Radian on the 22nd of next week is Garmin. I always find this to be an interesting name because they continue to surprise. They continue to do well. You look at a one-year chart of Garmin here. It's been essentially ever since last summer and earnings back in July. It's been pretty much a straight path to the upside from the low 30s, high 20s, all the way up into close today at $44.18. And you kind of have to scratch your head at this because the ongoing trend of smartphones, I know my Android smartphone has a fantastic GPS built into it. So my TomTom is on a shelf somewhere, and I'd imagine a lot of Garmin devices are following suit. So you have to kind of wonder what the future holds in store, kind of like Flip and how those handheld camcorders kind of got consumed by the smartphone market. You have to kind of wonder if the writing on the wall isn't on the wall long term for Garmin, and yet we're seeing nonstop activity in this. A lot of people buying upside in Garmin, a lot of love for this name. I'm looking here at the at.
I think the stocks had quite a march up. I wonder if the small boats in the Persian Gulf are using Garmin to try to figure where they're at.
There you go. Garmin is fueling all of the unrest in Iran right now. Yeah, there's 4,000 open right now on the March 44 strike. So that was upside. This is the name that doesn't do that many contracts a day. Well, lately they've been doing about 5,000 because they have earnings coming up. Usually they do about a couple thousand a day. So to have that many open on the March 44s just shows people are piling in on these calls here, and also about 1,000 or so on the March 45. So a lot of activity going on here in Garmin. People thinking this thing still has some upside, which is interesting because you would think the writing is on the wall for this stock. Maybe they've transitioned pretty well into the smartphone arena. I don't know, but interesting stuff nonetheless. Uncle Mike, what are you watching here in the Around the Block arena? Obviously, when you're not busy rolling all your upside in Apple.
Well, that's the thing. What I think is interesting about Apple, it closed above 500 again today, and so the classic Jesse Livermore trade a couple days ago, once it goes above a major number, it always has a rally up. And Apple had held true with Apple, not yesterday, but the day before. And with it, well, I think it's back above 500 again. So I think there's might be some more upside in Apple, but we will see. I mean, after all, what kind of an idiot would even bother hedging their downside with Apple?
I don't know when you say these words downside and Apple together in the same sentence, I'm not sure what you're talking about.
Yeah, I don't know.
It just doesn't make any sense to me, sir. It does not compute. Mr. T-Nav, what are you watching over there in OX land?
Well, we've got some news tomorrow. Tomorrow we do have the CPI, so that'll be very interesting.
What is this CPI you speak of?
What's that?
I said, what is this CPI you speak of? Who watches that CPI?
The
Inflation, what is that?
Index. I mean, I know that the Fed, says really inflation's not that bad, and they're right. I mean, I look at, my healthcare insurance and, kids' education, and there really is not that much inflation going on. So, we'll just have another good number here tomorrow. But, CPI is, going to be around tomorrow. As far as markets that I'm watching, I'm actually kind of watching copper again still. I like to watch copper because it kind of times like this, I think it has a tendency to sort of, I hate to say it, but just kind of give us a little bit of a clue about which way things are headed. I'm going to watch some of try to figure out some of the news on China, see, what kind of landing they're in for.
I was going to say China and copper go hand in hand. Those two are linked
Greeks
these
get
days.
Their money, yeah.
Yes. So you're slinging Navabi size and copper, 100 lots across the board?
No, not at all. I have nothing at all in copper. I have no trade whatsoever. But I like to watch it. I mean, it's, I've watched, it kind of led, I think, this last, little leg up here. So, we'll kind of see where it goes from here.
All right. Thank you for that, Mr. T-Nav. That is going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. I want to thank all of my cohorts, my partners in crime, for joining me on the program today, starting off with the man from the mountains, a.k.a. Uncle Mike, a.k.a. Thursday Mike. What is going on in the land of KYO that may interest, intrigue, and or titillate our listeners, sir?
Well, we're hyping it up. We have on Monday, February 27th, I have a webinar on the wings of a butterfly, both broken winged and fixed. I'll be on be guest speaking on the Options Express webinar platform. So for more info on it, go to the Options Express site under the Educate tab, and would love to have you there. We'll be talking about all aspects of butterflies.
I'm a broken wing man myself, but I could see why some of you may go for the more plain vanilla route.
Some people are broken-winged, some people are broken-hearted.
I live on the edge, baby. Live on the edge or go home. That's what I like to say. All right, and Mr. Seabass had to run out, but of course he does have a webinar coming up on February 22nd at noon. This one will be on gold. I know a lot of our listeners are intrigued by the metals and all the aspects thereof, so if you're interested in that, by all means, surf on over to optionpit.com. And you can sign up for that webinar, which will be held on the 22nd at noon. And Mr. T-Nav, what is coming up in the land of OX? And a little birdie just told me that you might have something going on, something that kind of has something to do with speed in an area that has something to do with speed. I don't know. That's what my crystal ball is telling me. I can't see any further than that. So what is going on at OX?
I think it's also the Super City, right? I think they did real well. I mean, I heard real good things about how Indianapolis did for hosting the Super Bowl,
City.
right?
Yes. They have a future in that Super Bowl business.
I mean, really, everyone seemed to say nothing but good things about that city.
That even makes it more ridiculous that they didn't put a freaking roof on Soldier Field here, so we could actually have a Super Bowl in Chicago. Imagine people like Indianapolis. Imagine a Super Bowl in Chicago. I know that's heresy to hardcore Bears fans. Oh, put a roof on Soldier Field. No, we're an outdoor team. But you know what? It might be nice to actually use that stadium for 9 months out of the year. So.
Yeah, I guess that guy couldn't get greased as good as the other people.
Exactly.
But we got the G8, so come on.
There we go. Nothing says boon to the local economy like global leaders shutting everything down while they travel hither and yon.
Yeah, right. I mean, 1% they get to travel here, everyone gets to stay away. It's going to be very difficult for us to get to work, we'll get searched, all that.
It'll be fantastic.
But,
it's like being in New York during UN week, which is also unpleasant.
Yeah, we do have something in Indianapolis. It is on March 10th from 8 a.m. to 3:30. And then, you mentioned something about gold, so that was a live event. But we do have a gold webinar as well coming up on the 24th. And it's on the 24th. It's a webinar, 12 o'clock Eastern Time. And the title of that one is Gold Trading Choices and Trading Strategies. So...
Oh, it's the week for gold. You can get gold on the 22nd and again on the 24th. So double down on your gold, ladies and gentlemen. If you want to follow the career path of Uncle Mike Tusaw and spend your days just managing your Apple and or gold portfolios, then you can't miss these back-to-back webinars coming up next week. And of course, if you want to hear more about anything we talked about on the show today, any of the options analysis or unusual activity, or any breaking news from the options market or education or anything else relating to options, and by all means surf on over to theoptionsinsider.com. You can also find more episodes of this program as well as all the other programs on the old Options Insider Radio Network. And of course, all of us here on the old All-Star panel want to thank all of you out there for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.